Welcome to TradeTheNBI.com. This is John's report is for Valentine's Day, February 14th. Yes, the market's still going to be trading, even though everyone else is going to be romancing. But, we can romance the market here in this particular case. Well, the other day we just had that nice little retrace to the ABM yellow. As we expected, it was catching up to it and didn't quite reach it, but it came close. But we did see some expressed weakness starting to take place here as that initial flood of money coming in from funds and that faded a little, but the reality is you still have the Fed pumping just an awful lot of money into the market via their repo and liquidity, simply because they're concerned about the virus situation and they know that the potential for greater fear and contagion exists, and we can see the effects economically down the road are going to have an impact, just not yet. Mostly because the U.S. is still strong, nothing has really changed dramatically, and with the small number of cases that are being reported outside of China at this particular point, there's reason to believe that this could be 5-6 months away before anything significant happens. So at this particular point, market's happy. Nasdaq standpoint, even with the cyan rising above red and green, expressing some short interest, you still have a complete reset of steel, which means there's just plenty of potential for new buyers to just lift any dip in price right back up. Now, that doesn't mean you're not going to get the dip in price. It just means that there's people loaded, ready to go. So just bear that in mind. And now we're getting close to, we've talked about this little blue line for some time as we've been hovering above, and this was sort of like, okay, the beginning of, a little bit of panic time for central banks, particularly in the EU, and this is a result of the Brit exit, because there's just no interest in buying a euro, and you can already see the effects of economic output here with the China situation because of the reduced travel and that, and we definitely see it in Italy in that, where it's pretty much shutting things down, and there's significant losses taking place. So the production of the Eurozone relative to the U.S. Juggernaut, not even close, and that's creating a real sell-off, because people want to own dollars, particularly even in a crisis. They're going to want to own dollars over other currencies. Oil, it's just going to hover down here at this little base price, and this is just because there's just so much uncertainty as to what the demand is going to be, particularly if there is very little economic output in China. I mean, they were looking at other ways to determine the Chinese veracity in their comments and what impact it's having, but they did an interesting one where they checked the daily pollution levels and found this massive decrease in the amount of pollution that was being produced, which is an indication that no, they're really not operating even remotely close to the previous capacities that they were, because without the pollution means none of their factories are working, and there's not. And then we're also measuring traffic flows, things that they can see, I guess, through satellite imagery and that. And it's an indication that you've pretty much shut down this massive economy in China, and that has ripple effects, particularly when it comes to their need for power consumption, blah, 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 and some of the force majeure they're doing with contracts. So this is going to ripple through, but later on. It'll be interesting to see if it starts to take hold right around the election or after. So we'll be keeping an eye on that. And of course, like we said, gold is still going to be the refuge for panic. And if we turn to R5K, so we started off with that deep selling, and even when we got the P2 here, we didn't have a significant reset until we kind of popped above the plus 13.5, and then we started to come down and we dipped below the cyan there and then came back above it. That was the earliest indication with rising DOC and as well as shakeout, and got above that negative 13. So even that just produced a little pop. It still came back right back to the exact same spot before it did the same thing again with green over cyan, and that led to the move back to the 100% Fibonacci lines. And then DOC spreads though with full reset, and turned around and re-triggered another buy, which led most of the day, but created a whole new series of positive extremes starting right about there, and pretty much in the post market here, we kind of towards the end of the day, actually, we filled it in and came right to it, and we tested it back again before the most recent pop, which puts us right back up at or near the highs. So everything's good. This is often the case, though, in troubled times, because what are you going to do? There's certainly no yield to be had in treasuries at this particular point, and so you've got to go where the money is at least being returned. And as the market continues to rise in the face of terror and fear of various things, in the real world, fund managers are getting left behind on return, and they got to catch up. So this all becomes, how do we keep up with the returns of the S&P 500? And sometimes you have to buy when it's ridiculous to buy. And of course, people with the valuations, and that we talked about this years ago, the multiple concept we knew was going to change, and people don't always take that into account. Plus, with the liquidity pump, there's already a devaluation in purchasing power, and that actually forces the market to go higher to compensate for the fact that there's been a devaluation. So that has nothing to do with earnings or any of those kinds of things that some people think are the guidelines for all, and they're not. So we're going to go with what is and what we see in our readings, and that will be the power driver, because it is what the algos do. It really drives the market, and the reality is there aren't that many of them, and if you know what you're looking for, it gives us a much cleaner signal than following a horde. As always, though, I will certainly put up any additional charts in that are relevant, and we'll keep this up to date for Valentine's Day. We'll see how many traders just don't bother to come in and what that does, but hopefully everyone has a great weekend and enjoy a fun day. Trade well.